At Durable Stocks, we believe that the best way to increase wealth is to make long-term investments in wide moat growth companies that are selling at attractive prices. Finding such companies at the right price is always a challenge. In today's momentum-driven market, it is extremely difficult. But one such company that we have identified is Upwork, a leading platform for connecting employers and freelance workers. Upwork operates in a growth industry. Over the past few years, the freelance industry has grown quickly to a total addressable market estimated by many sources to be well over $100 billion. Our increasingly dynamic, digital, and technically advanced economy will create demand for more specialized workers while allowing employers to maintain flexibility to adapt to the rapidly changing environment. Workers increasingly enjoy the benefits of freedom and flexibility that freelance work offers. These factors will continue to propel the growth of the freelance industry. Upwork's piece of the growing freelance market as measured by gross services volume, or GSV, was $2.5 billion in 2020. For the past 5 years, Upwork has enjoyed significant growth across all key metrics: core clients, GSV, and revenue as shown in the table. For the first half of 2021, its GSV was $1.66 billion, a 46% increase over its GSV of $1.14 billion for the first half of 2020. Upwork is a growing company in a growing industry, as market dynamics are likely to result in strong and growing demand for freelance platforms. Upwork's platform will likely benefit from its competitive position. Upwork has a durable competitive advantage. This advantage is what separates exceptional companies from mediocre companies. Upwork's advantage stems from its strong brand, its leadership position, and the network effects of its business. More companies offering freelance work attracts more workers, and vice versa, as the platform builds over time. In that respect, it is similar to leading social media companies, but perhaps with a longer runway for growth and a business franchise that is not yet widely recognized by the market. Now, keeping in mind, Upwork is not without competitors, but there are only a few significant ones, such as Fiverr, and Upwork is the largest, most widely recognized platform which confers an advantaged position. Having a wide moat in an industry likely to experience growing demand will create value over time. But to benefit from that value creation, investors must purchase the stock at a fair price. To quote Buffett, the price you pay determines your rate of return. Valuing young, growing companies is complicated by their short operating histories. We typically calculate intrinsic value as the discounted present value of estimated future earnings. Without a consistent earnings history, estimates of future earnings will vary significantly. But as Warren Buffett says, it is better to be roughly right than exactly wrong. So we make some reasonable assumptions. We look to past revenues and then build a model using the assumptions shown in the table. We apply a wide margin of safety when valuing young companies. To further manage risk, we allocate capital in proportion to our confidence in our decisions. To determine Upwork's intrinsic value, we use a discounted cash flow model. Upwork's revenues expanded at a CAGR of 21.42% from 2018 to 2020. Based on the assumptions in the table, 18% for the next 5 years with no earnings and 15% for the following 10 years with a 10% profit margin using a 4% discount rate, we get an estimated intrinsic value of $6.06 billion. Based on current long-term interest rates, 4% is a reasonable assumption. Further, we use a terminal growth rate of 0% after 15 years to place a reasonable limit on intrinsic value. Upwork's stock at its recent closing price of $42.57 per share has a market cap of $5.37 billion. Therefore, at its current market cap, Upwork's price is 11.4% less than its estimated intrinsic value using the assumptions in the table. Upwork is a promising young company worthy of studying and considering as an investment. Check back for future podcasts where we will continue to provide brief, timely reports on interesting companies to help you build a long-term portfolio. Also, visit our website at www.durablestocks.com.